What's up, my fellow Harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things Harmonic technical analysis. I'm your host, Lord MC. In today's video, we're diving deep into the fascinating world of Harmonic technical analysis. We're going to explore how these Harmonic patterns can give us unique insights into potential market reversals. This week is also packed with crucial economic events. We're going to be looking at the upcoming releases of GDP and PCE data, breaking down what they are and why they matter. So first up, we have the gross domestic product, better known as GDP. This is a key indicator of a country's economic health. It measures the total value of all goods and services produced over a specific period. So a strong GDP report can signal a robust economy, while a weak one might suggest economic troubles ahead. To end the week, we also have personal consumption expenditures, better known as PCE. This is another critical metric. It tracks the changes in prices of goods and services consumed by households. So PCE is very closely watched by the Fed as it reflects inflation trends and helps guide monetary policy decisions. So being able to understand these key economic indicators can give us a better grasp of the broader market context and help us anticipate potential market reactions. So if you like this type of content, don't forget to like the video, leave a comment with your thoughts or questions, and subscribe to the channel for more market insights and future videos. I also want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice. So question everything, do your own research, and come out with your own conclusions. Having said that, let's jump right into the charts. So first up here we have the SPY. We're going to be talking about the weekly and the daily, but first I want to mention the ABCD pattern and where we left off. I mentioned in my previous video that this pattern is what we're looking at so far for a potential reversal pattern to the downside. So now we have tested a new all-time high. This week, SPY went as high as 533.07 before closing on Friday at HOP at 529.44, just slightly above HOP. So this weekly was off of decrease in volume, and that is in an indecision doji candle. So meaning maybe consolidation can happen here, or you're just waiting to see what the outcome of PCE GDP, and then we either with good data continue pushing higher, or with bad data we find it will reverse. So that's still yet to be determined. So as far as the weekly harmonic patterns here, as I bring on my targets, if we do get a reversal back down with clear indication this week, the next level I'd be looking at here to fill this gap here, there's a gap around 524. We jump over to the daily here. We have this sharp pattern, the bullish sharp pattern. As you can tell, we're above the 90 EMA. We did lose it on Thursday off of increasing volume. So on Wednesday and Thursday, we did increase in sell pressure here. And on Friday, we pushed up on slightly decreasing volume. So if we are going to reverse here, the next level I'd be looking at would be to fill that gap, and that gap gets filled at 523.83. Below that, you have target 2 at 521.10, and then obviously below that, you have 515.85. You have a couple gap fills, and then target 1 at 509.24. Something that I wanted to share here, it's interesting. This pattern here on SPY, it's a bullish shark pattern, which completed already. But what's interesting here is the SPX already has the bearish bat pattern on the daily. So this gives us a little bit of better targets here. So if we're looking here at the bat pattern, you can tell it's kind of struggling to stay above 5,308. So if this reverses back down, we bring up these harmonic oscillators here. It did cross the HSI midline. So we're looking for a potential type 1 reaction off of this bearish harmonic bat pattern. So you would need to come back and lose XA at 5,229. And then you lose 5,179, and then you complete the type 1 reaction to target 1 at 5,130. So there's the harmonic bat pattern there on the daily. So the next level here for SPY to the upside, if there is good data, I'd be looking for a push to test 533 again, which was the high on Thursday, and then continuation up here where I have a target at 538.33. That's just based on Fibonacci levels. So one thing to the downside here, obviously, it looks like SPY is creating higher highs and higher lows. So if this was a higher high, we'd be looking for a higher low. And if you take the Fibonacci retracement here from when the pattern was created to the high point there, one thing that I'm going to be looking at, if indeed the data is bearish, you come back down maybe to test the 382 there, which is around 518. The 50% retracement is coincidentally at the top of the entrance of the second gap there that it left here back in early May. So right now it's obviously not clear yet whether it's going to continue pushing higher. So we're going to have to wait to see what the data says. If it is going to be good data, then I'd be looking at a retest or 533 and then 538. If it is bad data, then we can look to test here target 2 and then maybe all the way to target 1 to do the type 2 return to potentially hop down the line. Obviously it's still too early to tell. The HSI on the daily did cross the midline as well. but the RSI looks like it wants to continue pushing higher. We just need to see the volume. If I see volume decreasing, in my opinion, that means it's weak, and you could potentially just come to retest some levels before you make another higher high. So definitely keep a close eye on the SPY. Jumping over to the triple Qs here. So the triple Qs has this bearish shark pattern on the weekly. You can tell here there's 1, 2, 3, 4, 5 weeks in a row with increasing higher high, and on this current week we ended with decreasing volume, but we did close above hop for 2 weeks in a row. So what can we expect here for the triple Qs? So the next level I'd be looking at here for the triple Qs, I'm going to be taking the fib retracement from the previous all-time high to where we retraced here in the October lows. So we'll start from here and somewhere around there. So the next level I'd be looking at here, this is obviously on the weekly target. The 1618 is going to be $502. So I know that's a little bit far out there, but that's a next level, macro level I'd be looking at for a potential higher high. You have that critical $500 psychological level. You could also take it more macro here. Most recent swing high to swing low before this continued to make higher highs, and you're looking at 461.81 for the next level. So it got close on Friday, went as high as 460.58. So that's the 2618 here from July highs to the most recent swing lows here. You could even take it a little bit further, even at this most recent push up here, and the retracement that we got. The next level here, as you could tell, was 459 and it's 461. So in my opinion, I think you have the next target there around 461, as it did get really close there on Friday. If we jump over to the daily, we don't have a harmonic pattern forming here yet. We do have the HSI arrow that was triggered here on Thursday, and that was on decrease in volume as the HSI was completely overbought. The RSI is also approaching these overbought conditions, so we're going to see if that candle is also an inside bar off a decrease in volume. So we're going to see if this is actually going to be a reversal signal, and if it is, I'd be looking a retest of 450.72. There is a gap to fill here at 446.47, and then all the way down here at 427 and change for the other gap fill. So right now I'm not looking potentially for the Qs to continue pushing here. The volume is starting to decrease here. The 3-day here has this bearish hanging man there off of similar volume to the previous 3-day candle close. So if you lose 450.72 right there where I have this line, then I'd be looking for a retracement off of this harmonic pattern, which is a shark at the 1.13 at 428.79. Losing that level, obviously you come down here to test the 50 EMA, where it has pretty much held above, and then you have the terminal bar at 393. This will start the obvious type 1 reaction to target 1 at 342, but that is yet to be determined, so we're going to have to wait here to see. This is kind of looks like a potential reversal signal here to test maybe some levels just to make it higher low, and then potentially off of good news potentially come back up to make a higher high. If it is bad news, then maybe you break this downtrend and you start looking for lower lows, but too early to tell. HSI on the 3-day is almost overbought. You could get a potential HSI arrow. This would form on Wednesday. I would tell you that indication that maybe a reversal to the downside is coming, but we're going to have to wait to see. So keep a close eye on the triple Qs. Jumping over to the Dow Jones here. So the Dow Jones has the same bearish harmonic pattern as a SPY with the ABCD pattern here. Off of decreasing volume, it did lose ABCD there at 394.71. It closed at 390.64. So right now I'm looking at the candlestick formation here. Right now, this to some people may be an engulfing candle. It's up to interpretation. Some people categorize an engulfing candle as just engulfing the body. I like to use the engulfing candle when you engulf both the wick and the body. That means it's just more strength in that candlestick formation. But you also want to see it on high volume to signal more strength, right? So right now this is not on increasing volume. So this, to me, in my opinion, could look like a bear trap where you could just come back down and the volume pick up again and continue pushing higher to those targets here. To the upside, we have hop there at 408.76 and then 412.35. To the downside, obviously you come down to the test of 21 EMA, coincidentally right there where the gap is filled at 383.74. Below you have 377, the 50 EMA there at 369.50, and if you continue coming back down here, then you potentially start the type 1 reaction all the way to target 1 at 346.33, but that's still too early to tell. If we jump over to the daily here real quick, we had the black swan pattern. Obviously this completed up to target 2, way above target 2, but came down for a reversal here, but it is finding support above PT2 at 390.16. So if it continues back down to do this inverse V reversal, the next level I'd be looking at for support would be 389, right where the 50 EMA and SMA is at, and then below that you have 384.80. Then you have that gap to fill, like I said, 383.13, and then we would potentially be looking for the type 2 return to OPR to these levels here. To the upside, I do have a more macro level to hit there off the black swan, which is a bullish continuation to target 3 there at 412.84. What's interesting right now about the Dow Jones here is on the HSI, it is completely oversold. So if this comes in and does a reversal here with candle to the upside, with more volume to the upside, you could trigger that HSI arrow, meaning every reversal is potentially incoming to make a higher high. So we're definitely gonna have to see if the data is bullish, which if it is, then maybe we could see this target down the line, but keep a close eye on the Dow Jones. Jumping over to IWM here, so the Russell 2000 closed on Friday at 205.44. Off of decrease in volume, it did cross the HSI midline. No current harmonic target here, so what can we expect? Off the weekly, we do still have this white swan. See if it continuation, obviously you get really bullish up to 242.82, but I think this is still too far of a target to hit as of now. Right now, maybe this is forming a potential double top where you can come back down to test the 200 SMA around 194. Losing that double top, then obviously you can come back down to these targets here where the 200 EMA is at around 185, similar to where the target there, PT1, is of the white swan. If we go over to the daily, there's no harmonic here that we currently have here on the chart. We do have this previous dragon as well as the previous bearish crab pattern. As you can tell, this could be coming down here. This is a W formation, which ultimately in harmonics, that is a bearish pattern that could potentially be forming here to the downside. Obviously it hasn't formed yet, so it is finding support currently on the daily above the 50 EMA SMA, and it is currently below the 9 EMA here. So Friday was very low volume here, Thursday being the most high volume of the week. So what can we expect here for the for the Russell 2000 here? Right now the HSI is almost at these oversold conditions. So in my opinion, if it comes down here to test the 50 SMA, that's where it potentially could trigger an HSI arrow back up, but you want to have that with high volume. If you have the HSI arrow come back up with high volume, then it could signal that a potential higher high is incoming to test these levels again around 210 and 211, where it has found some resistance there. Every time it's come up here, it has come back down. So to the upside, if you do continue pushing here on IWM, then I'd be looking above 211 and then more macro here to 224. If you fail here, bad data, then next up I'd be looking at with 202, right where below the 50 EMA SMA is at. You have a gap to fill there at the 200, and then you can get a little bit bearish to touch the 200 EMA again around 194, where it did find support. So definitely keep a close eye on IWM. Jumping over to XLF here, the financial ETF. We do have a bearish shark pattern on the weekly. This was off of increase in volume, surpassing the 2 weekly candles prior to that candle. So what can we expect here off the shark pattern? You did lose this level here for me at 41.70. That is a harmonic level I had drawn. So the next level to the downside to potentially start a type 1 reaction off of this bearish shark pattern would be to lose terminal bar there at 40.47, slightly above where the 21 EMA is at. If you start losing, the volume starts to pick up, then you will start a potential type 1 reaction to target 1 at 35.91. If you continue finding support here, maybe reclaiming 41.70, I'd be looking at the 1.13 of the pattern, which is at 42.92. Then you have hop there at 44.50. I believe that is the next target from taking this Fibonacci retracement from the recent all-time highs to the most recent lows, and you get your target there at 44.99, call it 45. If we go over to the daily, what's interesting here on the daily is we did form the dragon pattern. When it formed the dragon pattern and tried to reclaim BC, failed, and it's currently finding support above the 50. So the dragon pattern is calling a potential type 1 reaction. Target 1 would be at 38.72. There's definitely some increase in selling pressure here this past week, so the MACD also turned red. Right now it is finding maybe some lifeline here with the HSI almost coming to these oversold conditions. So if it does decide to lose these oversold conditions here and test these levels, I do think you come down to test the 50 EMA, which is around 41.07. You might be able to lose that, and if volume starts to pick up again, you find support where it has clearly found support above the 50. You did lose that 50 over here, but quickly reclaimed and made a higher high and a new all-time high. So if it does the same thing again and it reclaims 41.61 off the daily, then you'd be looking for the type 2 return to OPR, which is 41.91 and then 42.95. If you do fail the 50 EMA here, the next level I'd be looking at would be 39.93, then 38.92, then to complete the type 1 reaction of the dragon pattern at T1 at 38.72. Below that you have the 200 EMA around 38.31. So like I said, you definitely want to see whether that's going to reverse here and volume's going to start pick up to the upside. Otherwise, I do think there is a potential here for volumes started to obviously increase to the sell side here on Wednesday and Thursday. So very low volume on Friday. That could have been to a couple of things. I already had the long weekend, so we're going to see if volume starts to pick up again coming into this week. So definitely keep a close eye on the financial sector. Jumping over to XLE here, the energy sector, we currently have this bearish scrap pattern on the weekly. You did have this engulfing candle, but this is off of slight decrease in volume, right? So it did kind of engulf the whole body and the wick. Maybe not the top of the wick there, but I would categorize it an engulfing candle. It looks like it's coming down here to find support at above the 21 EMA. If we go over to the daily here real quick, we do have this bearish shark pattern where we are at OB here at 91.01. During this week, we actually had an increase here in volume pressure, and then it started to decrease at the end of the week, but we got selling pressure finally. So right now it's looking like it's creating lower lows and lower highs. This obviously already created a lower low, so big question here is if the energy sector is going to find support here at the 886 of the shark pattern, which is at 91.01. You did come down, test that level, found support above it. So the HSI right now still has room to the downside here for these oversold conditions. So if that's the case, you can come back all the way to test the 200 EMA SMA, roughly around $88 and change here. If you find support here, the next level you'd be looking at would make a lower high, reclaim terminal bar 92.22, and then hop at 94.46. If you fail that, then maybe you come and create a lower low. So right now this is interesting to see if this is going to hold for the energy sector. Volume to start to pick up here on some of the other tickers like Exxon and Oxy. So we're going to see how crude oil really quick is doing. How much is a barrel? 78.55, and you do have a black swan pattern here where a reversal looks like it wants to come back up. Maybe we test the 200 EMA SMA, complete the type 1 reaction, which would create that lower high, and then maybe come for a lower low. So right now the energy sector kind of a little bit of a situation here where you could come back down. Obviously the energy sector coming down, you also have crude oil coming down, could be cheaper for gas there. So definitely keep a close eye on the energy sector. Jumping over to Apple here. So Apple has been pretty bullish lately. It does have this weekly dragon pattern, the bearish dragon pattern, where we claimed 50 EMA here. It did not come down to test target 1 there, and is now looking for a reversal to OPR. So next level I'd be looking here off the weekly pattern would be 194.52 and then 207.09, which would obviously create a new all-time high. If we go over to the daily here and I bring up my drawings, I want to cover really quick the dragon pattern here and the white swan. Obviously the white swan already completed the type 1 reaction all the way to target 3, and the dragon pattern I do believe has the same pattern target there around 196 to complete the target there. So I want to talk about the bearish shark pattern here first, because we did generate this shark pattern this week. We did have an HSI arrow off of Wednesday, and then obviously we had a huge selling on Thursday with increase in volume. It did test the 13 EMA, but on Friday it managed to get some volume. It was still decreasing, but it managed to close above the terminal bar there at 188.30. So in my opinion, that terminal bar is going to be very important for Apple to determine whether it's going to come for a reversal back down. Obviously, huge gap to fill after earnings. It fills at around 173 and change. So if there is bullish data this week, levels to the upside, I'd be looking for continuation to the upside here to retest the high there at 192.82. Above that, you have the 1.13 of the shark pattern at 194.56. Then you have hop there at 198.39, which is pretty close to the previous all-time highs there. Above that, then we had that psychological level again around $200 and change. Right now, the HSI did come down below that midline, so if it decides to come to these oversold conditions, then you'd lose the terminal bar, which is going to be a very key level here off the bearish shark pattern. You lose that terminal bar. I have the next level support at 185, and then 183, 182, and then obviously losing the terminal bar off of just the bearish shark pattern would start the type 1 reaction to target 1 to test at 178.45, which would be at the entrance of that gap. So that's roughly right where the 200 EMA is at. That's actually could be a healthy pullback here to see if there's more strength to the upside. Obviously losing that level, then you can come down all the way to target 2 of the shark pattern at 167.35. But right now I think it's still a little too early to call those targets here. It's going to be very important to see if Apple continues its trajectory upwards, because it did come up here off of decent volume. It's still overall low compared to the selling pressure it has had in the past. So we're going to see if volume starts to pick up here to the upside, or if data is bearish, volume pick up to the downside again, because there is a huge gap to fill. I know everybody's going to be looking at this gap to fill, but gaps don't have to be filled unless the data or anything else happens within the company that could potentially send it there. Right now it looks like it's building some momentum, but it is starting to, in my opinion, decrease here. So definitely keep a close eye on Apple. Jumping over to Microsoft here. Microsoft on the weekly has this bearish shark pattern, obviously way above HOP. This pattern looks like it's already kind of invalidated. The volume is starting to increase again on Microsoft, crossing the HSI midline, meaning you can continue pushing higher. So what can we expect if that is the case? The next targets I would be looking at here would be 433.87. You got kind of close there on Friday, hit at 433.60. I do have that as a favorite retracement from, I believe, the old all-time highs to the October lows here. So that's, I believe, the 1618 if I'm not mistaken. But if we jump over to the daily, we do have this bearish dragon pattern, which did complete the type 1 reaction all the way to target 2, but found support and is now looking like it wants to go to type 2 return to OPR. So we got really close on Friday, obviously decreasing volume on Friday, but right now you did touch these overbought conditions within the HSI, but no HSI triggered because the volume was not high enough, in my opinion. So if you're going to get an HSI trigger here, you definitely want to first come back up with the HSI. So that's going to now be around OPR, where you can get some resistance, and HSI arrow could form to the downside. If volume picks up to the upside, then the next level I'd be looking at would be 433.87, just kind of close where OPR is at 434.42. And then above that, you could just take a fib retracement from the most recent swing high to swing low here. So that's at 442.46 at the 2, the 127% retracement. Above that, you have the 1618 at 457.26. If you do find resistance here, you are closing above BC, but it's off decreasing volume. If you lose this level, that'll be looking at the test the 9 EMA here at 425 and change. Below, then you have the 21 EMA at 419, and then target 1 where the 50 EMA is at around 414.36. So right now it's still too early to see if this is going to actually come back for a reversal. You want to see that come close to the HSI midline here to see what it's going to do here. If it's going to find support, then maybe you just come back to test anywhere between where the 9 EMA is at and the 50, and then make a higher high down the line. If you lose that, then you may be coming down to test the lows again here, PT2 I should say, 398.39 down the line. So definitely keep a close eye on Microsoft. Jumping over to Amazon here. So Amazon has this bearish shark pattern on the weekly. So one of the things I'm going to be looking at here for the start the type 1 reaction is if it loses the OB there, the 886 of the pattern at 175.95. If you lose that level, then the next level I'd have is a 21 EMA, where there is a slight gap to fill there around 173, 174 and change. Below that, then you have the other gap to fill there around 160. And then you would complete the type 1 reaction to target 1 at 135.60. This is obviously on the weekly chart, so that may take some time to play out. So right now we're going to have to figure out to see if that's going to be the case. If we find support above the OB here at the 886, the next level we retrace, would like us to retrace would be the terminal bar there at 189.77, and then hop at 203.04, which would create a new all-time high. So right now Amazon is having a little bit of resistance here around that 188, 189 level. You got rejection once, twice, 3 times, 4 times here now. It looks like 5 times on the weekly. So bit of resistance there. If you can find support off good data there, then maybe this finally goes and breaks that $200 psychological level. On the daily, we don't have no current harmonic pattern. It is finding support above the 50. The HSI here is completely oversold. So if it does get some volume to pick up again to the buy side, then you want to see that with high volume signal that an HSI arrow is coming back up like it did over here, and you could see a higher high down the line. If it doesn't, you did get the 921, and if volume starts to pick up, it gets a little bit bearish here for Amazon, where, like I said, there is a gap to fill there around 173.92. Below that, then you would come down to hop 162.95 and you fill the gap there down the line at the 200 EMA. So definitely keep a close eye on Amazon. Jumping over to Tesla here. So Tesla on the weekly has this bullish Gartley pattern. It kind of closed on an inverted hammer candle. It's not a best picture perfect inverted hammer candle, but we're looking at the retest here of XA, which is finding some resistance. You had 1, 2, 3 candle closes where you wicked up there but found resistance here. So you did close above the 13 EMA. It's off of increase in volume, still relatively low to this candle here, but maybe the volume is starting to pick up here. The HSI crossing that midline. Looks like it wants to continue pushing to these overbought conditions, and that could be anywhere between the 50 to 200 SMA, and that's around 201 and that 197. So right now there's that psychological level again to test at 200 where the 200 EMA is at, and it is finding some resistance for the time being. If we go over to the daily, I am tracking the black swan more closely than I am the weekly here, because this next level here for Tesla, if it is good data this week. The HSI did cross below the midline, so we're going to see if this starts to curl back up. If it starts to curl back up and you get volume to the upside, you definitely want to see it retrace above 200 EMA where CD is at 198.87. Then you have the OPR there where the 200 SMA is at around 215. If you fail support here where the 50 SMA is at, as you can tell here, it is finding support above that where the yellow line is at. That's around 171 and change. If you lose that level, then you're looking at 160, 175. And then you also have a gap to fill here below target 2, which is around 147 and change. Obviously losing that target 2 on the black swan, and if it gets very violent, usually when you lose PT2 and go to a PT3 off the black swan, it's because it could be news related or something is incoming. So not saying that's where it's going to, it's just looking at target 2 to see the ultimate level for support for Tesla if it decides to come back down. Otherwise, you look for a retracement back up to test that breakout of the $200 level. So definitely keep a close eye on Tesla. Jumping over to Google here. So Google ABCD pattern, bearish ABCD pattern on the weekly. So what can we expect here? You did have this doji candle that was formed on Friday. So this is signaling maybe consolidation is incoming or a reversal is incoming, right? We don't know yet. So it did close below hop. If this is actually the reversal signal, we're going to have to wait for another weekly candle close to signal that a type 1 reaction could be potentially starting. The volume is kind of relatively low on the weekly. So if we do come down here, the next level I'd be looking off of the weekly harmonic patterns. Harmonic target here would be ABCD at 164.78. Then obviously you have this gap fill that it left from the earnings play. If we go over to the daily, still has this black swan, still finding support above PT3. So volume here obviously was harmonic buying. There was definitely buying here more than there was selling pressure. You did get some volume to the downside on Wednesday and Thursday. On Friday, you almost tried to come back and reclaim some of those levels here. Did manage to close the day above the 90 EMA, and that is a doji candle. So we're going to see if there is more continuation to the upside, because if there is, I have a higher target there at 193.70. Below, if you do lose this level, the next level I'd be looking at would be the 21 EMA around 170, and then 168 here, PT3 here off the black swan. Losing that level, then you come back down to 163.29. Then you have that gap to fill again around 157. So right now the HSI did cross the midline. We're going to see if it finds support. Right now, if we're just looking at this, this is kind of just creating a channel, right? Creating higher highs and higher lows. So it is finding support above the 21 EMA on the daily. So if it does come back to 21 EMA to retest that level, then you would just create a higher low. If you find support, then you continue making a higher high towards that 193 and maybe down the line to that $200 psychological level. So definitely keep a close eye on Google. Jumping over to Meta here. So Meta almost matched previous candle close on the weekly here. It did reclaim the 90 EMA there and is staying above the 21 EMA on the weekly. Right now we still don't have a harmonic pattern on the daily on Meta. Let's see if we pop one on the 2-day or the 3-day. Nope, no pattern yet. So what can we expect here just looking at the daily chart here? The next level I'd be looking at, because Friday actually was a little bit bullish, up almost 3% on Meta. It went as high as 479.85 before closing the day at 478.22. So volume started to pick up here on the buy side, and it looks like it almost is coming to retest that HSI midline. You cross that midline, test that 50 SMA here where that gap is at around 484.39. That was a gap it left from the earnings here. So fill that gap, you reclaim 50 SMA, and you may be breaking down the downtrend that it's in, right? Because if you take a fib retracement here to where it came dropping off of the earnings play there. So that is roughly retracing above the 50 SMA. So if you reclaim the 618, the momentum has shifted, and you can be looking at to create higher highs and higher lows, which is a bullish trend for Meta. So very important to see if Meta is going to have some support here and volume to pick up to reclaim those levels, because if it is, then you'd be looking at a push to the upside for Meta. So definitely keep a close eye on Meta. Jumping over to Netflix here. So in my previous video, I mentioned that Netflix looked actually extremely bullish, and you continued pushing higher here. On Friday, you went as high as 652 even there, and you closed the day at 646.75. So what can we expect here? Obviously, the buying here has been Harmonic buying more than there is selling. I'd be looking over the daily here. We do have this bearish alt-bat pattern that formed. So what can we expect here? Friday, you had high volume. So it did close above BC there at 635.38. The next level I'd be looking at would be to retest the XA target there at 651.61, and then hop at 665.19. And then you had the previous all-time high there at $700.99. If you do come down here, you did form that HSI dot, but it made a higher high on Friday. So, and that's off of increase in volume. So if you're going to lose this level here, BC, you definitely want the volume to step up to the downside. You're losing that level, then you come to retrace to target 1 at 609.29, roughly where the 50 SMA is at. So make or break here for Netflix. It is approaching that HSI midline, which will give us the indication. If it does cross below it, then we see a possible type 1 reaction to test target 1 there. If it does find support above BC, then maybe you're looking up for a type 2 return, a hop first, and then maybe continue making higher highs here. So it did Netflix did retrace all of this movement from the earnings play here, gathered everything as a harmonic buy. And so right now, in my opinion, Netflix is still a little bit strong to the upside, so definitely keep a close eye on Netflix. Jumping over to NVIDIA here. So no surprise, NVIDIA continues to beat expectations. They obviously did very well on earnings, and the market continued pushing NVIDIA to new all-time highs. It went as high as 164.75 on Friday before closing the day at 164.69. The MACD has also flipped green. I mentioned in my previous video in the Discord knew that I was kind of bullish on NVIDIA to beat earnings. I know some people may not think that makes sense, but they continue to show great numbers, and continuation to the upside here was warranted. Also told you by the HSI era when it was oversold, it came back up with volume, and then it continued now this week with even higher volume. So what can we expect here for NVIDIA to the upside? If there's more continuation, yes, the RSI is completely overbought. Right now there is a bearish divergence on NVIDIA here, but if this continues to push higher and invalidates that RSI there around 191, then it will go higher, in my opinion. The next level I'd be looking at for that to be the case would be 1,208.78. We don't have any harmonic pattern forming on any of the time frames, on the macro time frames, I should say. It's still looking like it wants to continue pushing even higher, in my opinion. Obviously, we're going to have to see what's the stock split that's going to come with on, I think, June the 7th, if I'm not mistaken. Or June 10th, it says here, according to TradingView. That's when the stock split will happen. It'll be 10-1. We'll see if there's more momentum before then to continue pushing this higher. So the next level to the upside, like I said, I have 1,208. Below then, I do have 1,030. And then you obviously have that gap to fill. So right now, the HSI on the daily wants to continue going to these overbought conditions. The RSI is completely overbought on the daily. There is a divergence as well here. You could tell, take a divergence from here to here, and the RSI is also making this is making obviously higher highs, and this is obviously creating lower highs here. So if there is going to be a bearish divergence, you want to see volume step up to the downside. We don't have that yet, at least not off of Friday's close. So we're going to have to see if tomorrow, Tuesday, you get some volume to the downside, and I'd be looking at some of these targets here. But right now, I would not try to go against NVIDIA, in my opinion. So definitely keep a close eye on NVIDIA. Jumping over to Bitcoin here. So Bitcoin, very bullish, and went as high as almost 72K for the week. It did generate a new bearish harmonic pattern here, the bat pattern. At the completion of point D, you actually came for a type 1 reaction to target 1. It didn't hit to the penny, but nonetheless, it did come down there very close. So I'd say that it is a completion of a type 1 reaction. So right now, in my opinion, it may be starting the type 2 return to hop there. So the HSI is approaching that midline. You cross that midline with increase in volume, you would break XA there at 70.9K, and then you can look at these higher targets at hop at 75K and then even 77K from the previous dragon pattern there. If you do have resistance here and you're not able to hold above 69K, then the next level I'd be looking at would be target 1, 66K, and then target 2 here at 62K. So right now Bitcoin, if we go over to the weekly, see if there is any indication here of a new harmonic, and there isn't. We do have that HSI arrow continued here with increase in volume, so that's good to see on Bitcoin. If you're going long, this volume starting to pick up. Obviously the week has just started, so we're going to see if this weekly candle close will be creating a new all-time high and a higher high. So right now, again, to the downside, I'd be looking at 69K to lose that level, and then target 1 at 66K, and then you can find support around 65K to retest just a higher low and then continue pushing higher high. So right now, still a little tricky for Bitcoin to break above these highs here. It's like 1, 2, 3 times here. It's try to test above, stay above 72, 71K, and it's finding some resistance. But if the volume picks up, then we could be looking at higher numbers. So definitely keep a close eye on Bitcoin. All right, guys, that's it for me. I will be streaming tomorrow, same time as always, from market open to market close. So if you want to catch me live, I do stream over on Twitch, so link to my Twitch is in the description box below. Having said that, I hope you guys have a good rest of your Memorial Day, and I will see you guys tomorrow bright and early. Take care, everybody, and peace.